look at stocks being Einhorn today on the words of hedge fund manager David Einhorn. Let's talk to Fred Katayama, just back from the Value Investing Conference. I learned on Twitter to Einhorn is a verb.
It's a verb now, yeah.
Yes, moving stocks up and down. Okay, let's kick it off with Chipotle because they're down 5.5% today.
Yeah, and the reason is because Yum Brands Taco Bell, he says will be eating Chipotle's lunch. The reason it came out with a higher upscale line called Cantina Bell, it's a lot cheaper than Chipotle. A lot of fans may gravitate there, he says. Plus, he says that grain prices are up. That means meat prices will also rise. That'll hurt costs, raise costs, and so will the new health care laws for Chipotle.
Okay, Herbalife is up today because he did not talk about Herbalife.
Yeah, it's getting a second life in a way. And the reason is because when he was on a conference call and asked questions about Herbalife, that stock tanked. This time, by virtue of not mentioning it, new lease on life.
Green Mountain Coffee took a short position a year ago.
Yeah, and that time, roast became toast. The stock was in the 80s when he started talking, went down as low as the 20s. Well, today he's still negative on the stock. He says the company's not releasing enough information, disclosure to shareholders. Plus, he says the company still isn't able to get a good grip on costs.
All right, we're moving over to healthcare. Cigna up 1%. He says it's his favorite HMO.
Yeah, he likes HMOs to begin with as a group, and among them, he says this is better. It's a higher quality stock that's favorite among HMO stocks. Plus, he says it's a domestic stock. So it won't be affected by the woes of Europe or what he called urorectile dysfunction.
Okay.
He said it, not me.
Right. Let's keep this PG or PG-13 at least. Finally, GM up 1.5% today. Good sales figures, and he says they're getting it right.
He says they are, really in the fast lane. And he says that look at the new lineup. 60% of its lineup will be product refresh or brand new. He says that's good for sales. Plus, he says international operations are still doing well. It's a big bulk of sales. And he says Europe is improving. China is still going strong, 10% increase he sees there. Another big headline, cash. He says that the company has the option to buy back its own shares in the open market or hopefully buy back the government's 27% stake and get rid of that moniker, General Government Motors.
All right, stocks that have been Einhorn, and we have been Katayama.
If I only had its influence.
Thank you so much, Fred Katayama. Moving on here to the hotspot, as I do, I want to remind you to check out the snaps, the type that runs on the bottom of your frame for more headlines of the day. Here at the hotspot, we have the sizzling hot John Marino, editor of Reuters PE Hub. Let's talk about Deutsche Telekom's, it's just out, T-Mobile USA unit in advanced talks to acquire Metro PCS up 18% on the news.
It's big news, but let's remember we're not all the way across the goal line. AT&T, T-Mobile got scuttled by federal regulators.
Right.
It's not really 100% certain that this will get done. However, it's really big news, obviously, for the smartphone carriers. They're going to be now, I guess, a little bit better equipped to negotiate with, AT&T, or rather Apple and Google.
Right, okay. Let's move back to the main monitor, the market monitor here, and talk about auto sales. We touched with Fred on GM. Chrysler sales, the number 3 automaker, sales up 12% from a year ago, most sold since September of 2007.
Big news for our smallest automaker. From our biggest automaker, though, we have big, small news. Ford had really big news for their small car sales, the highest in a decade. Maybe American consumers are a little bit more mindful of gas prices.
Right, that would seem to be the case, as you mentioned. And Ford, which is basically flat, they also said their small cars, like the Ford Focus, doing well.
Right.
All right, so let's look at all the stock. Here we've got Fiat, we've got some green hours there, and we've got Ford just down under 2% as well. Moving on to the broader U.S. stocks, let's take a look at the market, how everybody's doing here. We've got a few red arrows there across the board. Grim news again globally, Europe, Spain looking for a bailout.
Still waiting.
Still waiting, okay. Finally, we're going to talk a little private equity, Mr. PE man. Story out of the New York Times, Andrew Ross Sorkin. This is interesting. PE firms sitting on $1 trillion, or what they call dry powder, that they've got to spend in a use it or lose it situation, or else they have to give it back to investors.
Right. Well, so I guess it's not exactly lose it, but it is lose that top line revenue, and that's what they don't want to do. So if you look at, for example, a great example is the Carlyle Group. They went public earlier this year. They have been consistently leading league tables for deals done. No surprise, their stock has also popped to match that. Now, looking a little bit more broadly, there's KKR, Blackstone, Apollo. If they kind of follow this in a similar fashion, they start doing more deals, you're going to see their stocks pop as well. Individual companies that are dependent on the LBO shops, I mean, obviously, two big ones would be Best Buy and Staples, already rumored to be having takeouts brewing. I'd say one important factor would probably be the congressional negotiation for the so-called fiscal cliff. If the market gets that pop on top of it, that means the private equity is going to have a sustained good economy to be spending in. Look for them to really deploy that capital quickly. They have to use, according to Sorkin's story and Dealbook, $200 billion, not counting the debt that they get for deals, by the end of next year.
Wow, okay, moving fast. And finally, you have a very interesting story a very lean and mean story about pork prices. They're going up. Basically, there's no pork shortage, but the feed prices are going up because of the drought and because of corn. And private equity, how are they involved in this? It kind of depends where their exposure is in terms of how they do with the pork prices soaring.
It has to do really with where they are on the food chain. I mean, one good example is Highland Capital Management. They run a company that makes ribs that are sold through another private equity firm's company, Tony Roma's. Now, where you're at in the food chain is obviously really going to impact what you can charge the next person on the food chain. No really different, I guess, than, say, Smithfield or Hormel. The pork producers of the world are really going to feel a pinch, and if that's PE, that's one place that they're not going to be doing big deals.
All right, let's go have a BLT for lunch.
Before it's $10.
We'll charge it to the company. Deal. All right, John Marino, thanks so much. Remember, follow us on Twitter at Reuters Insider, and check out our Reuters YouTube channel. That is Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.